Dividend investors, bonjour. This is Mike Hiroux, founder of Dividend Stocks and passionate investor. I'm here to help you invest with more conviction so you can enjoy your retirement. And speaking of conviction, today we're talking about Alimentation Couche-Tard, a small convenience store company founded in Quebec with a very low yield, under 1%. And I know a lot of investors will tell me, Mike, that doesn't even cut the mark to be called a dividend stock. We're talking about 0.78 right now. It's nothing. It's not even paying my utility bills out. You want me to retire on this kind of stock. And I actually want to show you how this is a great addition to any kind of portfolio, even if you're a retiree. First, because the company is growing, so it means that you should expect more stock appreciation. And second, because this company is incredibly recession resilient. And if you're expecting that anything would go bad in 2021, or the market is like trading at crazy valuation right now, so you don't feel comfortable, well, Alimentation Couche-Tard is not getting the love it deserves right now, and it will go through the next recession no matter what is happening, and we'll look at that in this video. So now let's start with this business model, which counts 14,000 convenience stores, and funny fact, they are selling $500,000 hot dogs every single day. It's as much as they're selling coffee, actually, 750,000 coffee a day, serving 9 million customers every single day. So when you think about it, a convenience store is just the quick stop for pretty much anything you forgot or you crave for that is like 1 or 2 kilometers away from your house. And this is exactly what Alimentation Couche-Tard is offering. In terms of revenue mix, most of their money is made from the US, and most of their profit is also generated there. So we're talking about 72% for revenue, 70% for revenue, 72% for profit. What I found very interesting here is the company shows lots of volume in fuel cells. We're talking 71% of their revenue is coming from the sale of gasoline. However, only 46% is linked to it. So half of their profit is made from sales inside the stores, and those are incredibly recession resilient. What you see on this graph is sales inside the stores from 1999 till 2019. Interesting enough, during the dot-com bubble and the 2008 financial crash, we had huge recession. Lots of people lost their jobs, but sales are still resilient. They even increased for a few, like during those kind of periods. And you can count on this part to generate lots of cash flow, lots of profitability. And we have seen similar numbers in 2020, even though we had a huge lockdown and lots of fuel was not sold, right? And as the economy was on pause, what is interesting is what we see right now is even though the price at the pump is getting lower, margin are actually increasing. Since 2014, we had a better margin. We're talking about around 22% versus 17% in the past. And it's interesting to understand what's happening here because back in 2015, 2016, if I remember correctly, we had a first oil bust and we had another one in 2020. And what we've seen so far is while volumes are going down, their actually profit are still going up. Let's look at this year, strong results for the last quarter. Exactly what I've mentioned, fuel volume is down, but profits is up, and same thing, resiliency inside the store. So more profit, more sales over there at the same time. So basically what you're looking at is a company that has a global footprint, that are selling everyday goods and everyday food. And yes, they're using fuel as an anchor to attract customers, but it's not just about fuel, it's about proximity to their customers. And they're actually well aware of the wave of electric car that is coming in, and they're actually doing something about it, which is quite interesting actually. So let's go back a minute to look at their global footprint. They're mostly in North America. So as I mentioned, founded in Quebec. Their biggest transaction was when they purchased Circle K in the US, became a huge player in the convenience store against 7-Eleven. So they're pretty much the two biggest player around the world. And what is very interesting here is a few years ago, they bought convenience stores in Norway. So you can see now they're getting closer to 3,000 convenience stores in Europe, and most of them are in Norway. And this is their laboratory for the future. We all know that lots of governments, lots of countries are setting up rules to stop making cars that works on fuel by 2025, 2030, and so on. And lots of investors are concerned what Alimentation Couche-Tard will do with all those fuel pumps if nobody has a car with that needs fuel, right? Well, first, let's not exaggerate anything. When you think about it, in Norway, those rules are already in place for several years, and now the electric car represent about like 15% of all cars on the streets. So we're not in a world where everything runs on electric, and at the same time they're already adapting. So what Couche-Tard is doing is they're actually putting a fast charger station around their convenience store. And when you think about it, that's very smart because they have a lot of stores. They pretty much connect any kind of city, so they're always nearby. So if you're running low on your battery, you just go in, you use the supercharger, you get in, you get a hot dog and a coffee, whatever please you. If you want to have both at the same time, it's kind of weird, but yet they're selling those. So you have a small snack, you buy a few things, and then stickers or a toy for the kids, magazine, and then you go back to your car, it's fully charged, and then you move on. So they're already experienced those kind of stores there, and it's running well. It's not like it's the division where they're losing money. They're actually very profitable, and I think that Alimentation Couche-Tard will be able to transform their convenience store in this matter going forward. What's really amazing about Couche-Tard, though, it's his incredible ability to acquire convenience stores and integrate them into their own business model. Since 2004, we're talking about 60 acquisition, over 10,000 stores. It is just this huge beast buying and eating up every single convenience store chains they can find. And the best part of it is they have this expertise and this knack to just integrate everything all together and make sure it works well. Funny story, you can tell by this picture that I bought in Vietnam. I spent a month in Vietnam in early 2020, and I've seen Circle K's all around, and it was great because when we entered in Circle K's, they were more organized. They have better stuff, better lighting, more organization than any other kind of convenience store. So when you go in, you're more tempted to buy a lot of more stuff. Actually, I was doing sometimes my grocery for the night at those places because I was able to find everything there. And this is how they make it so great. And on a financial point of view, what is nice is you'll see a lot of businesses that goes with the growth by acquisition strategy, and they just keep acquiring, but then to be able to pay for those acquisition, they just pile up debts after debt after debt, and they're just telling you, yeah, but we're making more profit and debt is cheap and it's all good, so just trust us, you know. A little bit like utilities are doing, and if you haven't seen my video about utilities, click on the link description below. I've done my top US, my top Canadian, but those companies rack up debts like there's no tomorrow. What do you look at? Alimentation Couche-Tard is quite the opposite. The red line on the graph is showing you their leverage ratio, and their target is 2.25. And they're actually sitting right now at 1.13. What does this mean? It means that they're looking for more acquisition. Interesting enough, they will rarely make a bad move. In 2020, they were very close to buy Caltex in Australia, and then they were very close to buy Speedway in the US. And in the end, the deal with Caltex fell off before the pandemic, and they're still in discussion, but nothing is happening now. And Speedway got bought by 7-Eleven, their main competitor in this field. But Alimentation Couche-Tard just came to a point and say, you know what? It costs too much. It's too expensive. It's not fitting within our model. And they're actually a little bit like me. They don't mind missing on an opportunity if it means that it's not fitting with their investment thesis and their investment canvas. So they're following this strong discipline over there, and I cannot appreciate that, because whenever they make a move, it means that they're going to grow their profit like there's no tomorrow. Speaking of which, their strategy has always been to acquire more stores. Historically, 70% of their growth was coming from that strategy. And now moving forward, they want to reach something that is a bit more balanced between organic growth and merger and acquisition. Kind of appreciate this move as well. I want to see stores getting more profitable, especially when you're thinking about fuels volume that is likely going to slow down over the next 10, 20, 25 years. You want to make sure that your business model is able to shift gradually towards something else inside store sales, which they're already making like enormous gains over there. And the addition of supercharger station and other products should help the business growing even faster. Management is actually aiming at doubling their EBITDA. So they want to not just increase their profit, they want to double it in the next few years. They're quite aggressive on that, and it's actually working very well for them. And whenever they make money, you can make sure that you're making money too. Remember at the beginning of this video, I was talking about a yield under 1%, something very small, something not very interesting. When you look at the dividend growth rate, we're talking not just double digit, we're talking over 25% annualized growth rate since 2011. This year, they came in strong with another 25% increase. When you think about it, great recession. We're not too sure what's going to happen next in the next couple of years with the pandemic. There's a lot of uncertainties in the market. There's a lot of people that are out of jobs. And yet, Couche-Tard is telling you, don't worry about it. We're making money. We're making actually more profit than ever. And we're going to reward you. And a lot of people will tell me, yeah, but the 1% just doesn't cut it, Mike. Well, look at this graph for a second. This is the past 10 years. And when you look at the progression of Couche-Tard, it is just phenomenal. So yes, you're not going to get that juicy 4-5 dividend yield that lots of companies are paying you, but you're going to get growth beyond words. And I think that this is not about to stop. I think that the company has a very strong balance sheet. They're looking for more acquisition. They have already a very solid plan to make their stores more profitable. And they have seen the electric car coming in. They're not worried about it. They have a plan for that. And keep in mind that they own most of their real estate. So they have a huge park over there. So maybe there's going to spin off into a REIT one day. That would be also amazing. There's plenty of options over there for Couche-Tard going forward. And this is the reason why Couche-Tard is one of my favorite picks for 2021. I have it in my portfolio, and funny story, it was one of the first stocks I ever bought when I started investing back in 2003. So I bought the stocks, and then a couple of years later, I bought my first house, and I had to sell all my shares of Alimentation Couche-Tard. So I missed over 1,000% in profit on these stocks, but as soon as I could, I bought it back a few years ago when I quit my job at the bank, and now I'm quite happy with the results so far. But I think that we're up to another trend to reach triple digit and maybe 4-digit return on Alimentation Couche-Tard in the next 10 years. I hope that you have enjoyed this video. If you made this far, please give me a thumbs up. click on the subscribe button to make sure that you get notified for my future video. I'm gonna likely take a pause for the holidays. I have 3 kids at home that are doing homeschool right now, online school actually, so it's kind of hard to record videos with all this activities around, but make sure that I'll be back in January with a lot of like top stocks per sectors and analysis. Let me know what you think. Let me know if you have any stock recommendation or requests that you would want me to analyze in the future. And until next video, stay invested.